Hello and thank you for joining us. My name is Patrick Donohue, founder of DealPen, a professional capital markets advisory firm. This is our fifth installment of our video series, and today we're talking about angel investing. So what are these heavenly creatures we call angels? And there's a lot of debate on the proper definition of them. As a matter of fact, there's entire books written on the subject. Here's one right here. It's a pretty thick book, and I have read it, but I would pass. And by the way, my former analyst, Kyle Malta, you're watching this, you'll get your book back someday. But I would be more interested in reading, say, Monkey Business or Liar's Poker by Michael Lewis. It's a little more of an interesting read. Angel investing is a brochure at best. It's pretty simple. People like to make it complex and try to make it really interesting. And I'm here today to tell you some key takeaways to help you understand this world of angels, what it means, and to give you some pointers. So if you're raising capital in your early stage company and you're looking for these angels, hopefully some of my points will give you a little less heartburn. So what are these heavenly investors out there that everybody calls angels? When you boil it down, it's really simple. It's high net worth individuals that have the extra capital to deploy into early stage companies that have a high likelihood of failure. Many people think that angels are specifically focused in on industries, and many times that is the case. But keep in mind, the concept of angel investing in the financial community is really boiling down to high net worth individuals. So let me offer you a few points to help you along the way. The first point I'd like to make is be careful of angel groups. I know one early stage company that paid a $1,500 fee to a group in Texas just to have that group consider an investment. Any legitimate group, and I'm not saying this group wasn't legitimate, but if a group is truly interested in being angel investors, and they're truly interested in finding a great investment opportunity, they're not going to care about a few bucks up front. That just doesn't make a lot of sense. Point number two, be careful of intermediaries to angels. There's a lot of people out there, consultants, advisors, even investment banks that will act as an intermediary to angels. The name of the game in angel investing is for you to get directly in front of high net worth individuals. If you're in the book industry, the publishing industry, and Jeff Bezos would probably understand your business model, contact Jeff Bezos directly. He wants to hear from you. He doesn't want to hear from an intermediary or somebody else that knows you. Do not be afraid to reach out to people directly. Keep in mind, yes, they are very busy and it may take quite a while, but the best relationships are the ones in early stage companies where you're making that direct contact because they're investing in the founder, the founders, and the people behind the business. Point number three I'd like to make. Cast a wide net. You need to get a lot of at-bats. That is the name of the game. And try not to raise money too early in a venture, even with angels. Keep in mind that these people are not unsophisticated. They understand business typically very well, and they want to see some level of progress, or they want to see a business case being made. So do not be too early in your request to find early money. Do the best you can to bootstrap your venture so you're prepared when you go out and look for external investors. My fourth and final point, the market matters. Let me repeat that. The market matters. Angels are not immune to the broader capital markets. When the markets are off 10, 20, 30, 40% like we saw in 08, 09, they are getting hit and they're pulling in their horns. If your industry is out of favor, angel investors will see that. They're sophisticated. They're watching that. And so it'll make it all that much more difficult for you to raise money even with angel investors. So the market matters. Pay attention to who's getting funding in your industry. If you're seeing interest from groups that are investing in your industry, get out there and to figure out what is the catalyst to why they're making those investments and why it's a good time. And when that timing is right, hit it hard, day in and day out, hit it hard, because windows of opportunities can come and go to finance early stage companies. Thank you for clicking on the video. I hope some of the pointers were helpful. I welcome and would appreciate your feedback on this video and all of our video series. And my contact information is found at DealPen.com, DealPen.com. And I look forward to potentially meeting you in person someday. Thank you.